This is Inside the Wolf's Den, an entrepreneurial journey with Shawn and Joni Wolfswinkel.
Welcome back to Inside the Wolf's Den with your hosts, Shawn and Joni Wolfswinkel. Today we have a special guest with us, Allison DiSarro. How are you, Allison?
Hi, guys. I'm great. How are you? Good to see you.
Good to see you as well. So just a quick bio on Allison. Allison is a seasoned executive from Enterprise Bank and Trust. Allison, again, thank you for joining us today. And I know you and I met maybe at a conference, a couple years ago, and just super excited to see what you've been doing for the property management industry. So everybody knows that whenever we've had a great experience with someone, we like to bring them on the show to add value to them also. So again, thank you for joining us today. I want you to kind of give a little background on yourself and maybe how you got started with Enterprise Bank.
Sure. Yeah, absolutely. So I've been with Enterprise technically about 4 years, but Enterprise purchased a bank that I started our property management banking division I apologize. So I started our property management banking division at a bank called Seacoast Commerce Bank back in late 2009. And that division, while it wasn't necessarily a division in the beginning, it was more of just a niche area that we were trying to get business from the deposit side of banking. It then quickly became really, like, for lack of a better phrase, the bread and butter for the bank at the time. And so we did turn it into more of a formal division a few years in after that. But I lead that division. Within that division, we have our own operations team. We have our own legal compliance policies and procedures, and banking specialists who really with myself included, of course, really just specialize in the compliance on trust funds for property management companies and how to properly set those accounts up correctly. Yeah, so we bank in most states, not in every single state, but it's something that, I got into, like I said, back in 2009, really just as a business development officer at the bank. Nothing special. It was a path that we saw to what we call, not the best term, but stickier deposits, which helps the bank, basically manage our balance sheet so that we know, and our projections so that we know what we can lend out. And I quickly realized that it was an industry that had a lot more issues than a typical business industry when it comes to banking, a lot more specific needs. Yeah. So I really dove right in and learned the business, stayed in it, and never left. So now we, in our team, only bank property management companies.
I love that you just saw that opportunity and, dove right into helping property managers, because I remember when we started way back when, in interviewing banks, that was painful, like to get somebody to understand like what property managers do and to be in compliance, right? And so that was a difficult part. So I commend you for diving right in, because you are truly a blessing to us property managers.
Oh, thank you. Thank you.
Yeah. So who had that vision? It's shocking that more banks haven't caught on to that, and maybe you want to keep it a secret, but it just seems like they didn't take advantage. So how did you see that vision and that niche, and for that sticky deposit, and, they carry higher deposits on average. So who saw that? How did you come up with that, and kind of the vision behind it?
Well, so really to really go back. So what happened was how this conversation even started really was, at that time, my predecessor, just a business development officer within the bank, was leaving the bank right as I was coming on. He was actually moving to Massachusetts from San Diego. I was moving to San Diego from Massachusetts, and he just banked a property management company, honestly, for the same reason that any other bank or down the street banks a property management company. They just came into the bank and opened the account. Also, probably the reason why most property management companies are not with the right bank, right? So at that time, he had mentioned this specific company. I won't say the name. And he said, these are really sticky deposits. These are great for the bank if you can get into this industry. And I don't want to give this too much credit, because what I'm about to say, just because I don't think it really helped. I think it just gave me a little bit more context, which is that I had worked for a property management company back in Massachusetts.
Mhm.
Not for a very long time, and not even in like a very significant role. But I understood immediately what he was talking about, and it was the security deposits. And of course, the rents come in and they go back out, but it does average over, depending on the company, it averages out to a pretty significant number. So I started reaching out to, just like any other business development officer, just reaching out, like cold calling these companies, trying to work with them. There was one specific company that I got a little bit further in conversations with, and this was very, very beginning. Like this was still like 2000, maybe early 2010. And she, at that time, her name was Jennifer Newen, and she kept saying, she was tough. She just kept saying, you don't know what you're talking about. It has to be how California Department of Real Estate says it's a trust account and blah, blah, blah. So I realized, like I said, there were some specific issues I had to figure out. But during the review of their accounts and like understanding more, like I said, I knew a little bit, but understanding more of, this money comes in and goes out, but it actually does stay for a long time. And those are pretty significant average balances. Then it really helped me personally really pitch it to myself, really, like, this is an industry that, like, if I get it right, we could succeed in. And quite frankly, I didn't have any other better ideas of like who else to go out and focus on. I could have, just as the business development officer, I could have just gone out and, gotten the restaurant down the street, but that wasn't going to solve our needs at the bank. So the banks, as you guys probably know, you can't lend out unless you have the deposits. You have to make your money. You make your money from the loans.
Right.
And so that's why we really needed that sticky deposit base. We were at that time a very small community bank in San Diego. And so I think we needed that niche area. Didn't know it at the time, but that's what we needed. So I think that what led to the secret sauce behind it is not only that we saw this, like you said, like I said, I didn't really have any other ideas. So that wasn't really the secret sauce. We saw it, which helped. I think what really moved us forward and brought us to where we are today is the consistency. So like Shawn said, like there are banks that, you think haven't thought of it. Believe me, banks have thought about it. We have banks trying to do it all the time. But the problem is they come in when they need the deposits. Banks ebb and flow. Sometimes you have a strong loan pipeline. Sometimes you have a strong deposit pipeline.
Right.
When they need those deposits, they have to go out. They have to use certain resources, usually rates, to get that money, to incentivize people to hold that money with them. But the second that loan pipeline gets strong and they have the deposits to lend out, or vice versa, the second that they are strong, they then divest themselves from it. So now they're no longer, a property management focused team. They're just deposit gatherers. We have deposit gatherers, but not in the property management team. In the property management team, you are in it for the long haul. You are in it for property management and no one else.
Right.
We don't talk to other industries. This is all that we do. I think the consistency and the dedication is really the secret sauce to it all.
Yeah, it makes a lot of sense. And I mean, the only reason we didn't, Joni had met you several years prior, and the only reason we hadn't moved our accounts, number one, it's painful to move accounts, but you guys did a phenomenal job and really made it easy. So, but it speaks to you and your guys'
and that's what I kind of want to hit home on too, because I think a lot of times we're afraid to, make that move because we think it's going to be so painful, right? But if you have an onboarding process and a great team like you do, made it simple.
Correct. Yeah. But the only reason we didn't was because of the same concepts of what you're addressing. We were in real estate prior. So meaning like real estate development and investments. And so, we banked with a certain banker for years but why he loved us so much was our deposits and our security deposits and all. So as long as we kept all that with him, I never got turned down for a loan, and so we were able to borrow a lot from him. So that was the only, I use it as so it's the same concept, but,
leverage.
Leverage.
Right.
Yeah. And so it worked for that scenario. But once we kind of slowed down on building and doing all that, it made sense to make a move because of some of the things that you guys offer in your banking, specific for property management. But maybe just talk a little bit about that. What is your like approach to relationship management? I think you do also a great job personally at doing that, but within the property management division and HOA space, you do a great job of providing customer satisfaction, long-term partnerships. What's your approach to that? Is it just natural for you, or is it, do you, what's the word?
Yeah, I think it's kind of like a combination of a few things. We're going to play a game at the end of this. We'll watch back and see how many times I say the word consistency. And we'll all
I love it.
Like take shots or something.
I love it.
No, but it really is like consistency. That's like what I teach our team. And it's not teach, but it's a message that I try and drive forward at all times. Like I want to be doing the same thing, if not more, of course, but the same thing that I was doing for my customers 15 years ago that made them fall in love with the bank in the first place. And that made them go out and talk to everybody about how much they love the bank. I mean, that's the real secret to our success these days. It's just that you guys all talk about us, half the time I feel like I don't even have to pick up a phone anymore, right? Because everyone just says that they love us. But it's important to me that it's not just that someone came on 6 months ago and loves us and is happy they made the switch. I want someone to still feel that when they moved to us in 2011. Like I know exactly who my very first property management customer was, and they're still with us today. And I want them to feel the same way that they did, if not better, of course, than they did in the beginning. And it's not just like the customer service approach. It's also the dedication to the industry in general, right? Like I think where it really comes down to is I always say, like, we are more involved in your industry than we are involved in our own industry. So it's funny. You put me in like a retreat with all the hundreds, if not thousands. I don't even know how many bankers we have at Enterprise. And like, I'm never even talking the same language as them. And they're all like great seasoned bankers, but it's because I'm a property management banker, and it's very different. It's like, that is the industry that I focus on. And then banking kind of is just married to that, if that makes sense. And that's how our team is as well. So, what I mean by more involved in your industry is like, we work with your vendors. We work with the industry partners. We know the teams out there. We work with the third-party bookkeepers. Like, those are really like our vendors that we think of. We're obviously involved in all of the events. That sounds pretty basic, but that's a big dedication. Like, we are there. We are part of those conversations, and we're learning the same things that you guys are learning. Even though we're not really applying it to all of it to our business, it's still giving us context to what our customers are dealing with and going through, and problems that need to be solved, or even just ideas like for the future, right? And then number one, of course, is compliance. Like the compliance is unbeatable. It is knowledge that banks just don't get, and it's not that like no one else has ever gotten it. Believe me, like some bankers have gotten it, but you can't just have one person know it. It has to be part of the policies, the procedures. Like, everyone has to kind of be on board with it, which I think is why like a division is a lot different than just a team of business bankers banking your business.
Totally.
So really you're getting more of, property management focused banking team. So we kind of become part of your team instead of just a business banking team, which is great for your business. Like that banker that you said that you had, that provided a lot of value to you. But once you start to see the difference between the two, you start realizing the value in having someone more industry focused.
Absolutely. Yeah. So one of the big reasons too, because we were referred by Ralph with RPM, who's a guest of the show. But yeah, he was like, he posted in a private Facebook group. He's like, if you guys aren't banking with Allison, I don't know what's wrong with you. And so like, that was what triggered us like, hey, yeah, we need to really do this. I don't know. I should have just listened to Shawn.
And Allison was so patient. I kept bringing it back to my team, and I'm like, Allison, next event. And finally we were ready.
It took Ralph.
I just like stopped asking after a while, Joni. I just was like, you know what? It's going to happen when it happens. And
it was one of those.
Also a nice thing about our success. Like, we just know it's going to happen, and we don't have to like bang down your door for it.
No, and it was one of those things like, man, like, why didn't you do this sooner? You know,
Way
but
sooner.
hey,
Yeah.
it only took us
Everybody
like
says
8
that.
years, right? But
I know. No, everyone says that. Everyone says that.
Allison, can you discuss maybe some of the challenges that you face in your role?
Yeah, for sure. So, I mean, from
Probably a lot.
banking, yeah, lots. So there's so many different ones, to be honest. But like, if you take out the property management side of it, just the banking in general, and you're really managing. How do I say this? You're feeding a beast, right?
Mm-hmm.
Like on the deposit side, where we are at the end of the day, we're a specialty deposit team, and you're really feeding the larger beast, which is the lending pipeline, which is not what we do. That's not like, you know, again, very different than other business bankers. We're not going out getting both loans and deposits. We're getting this part of the chunk, and the second part is the loans. And while we're not really involved in the loans by any means, I mean, for full context, of course, my customer needs a loan. I'm going to align myself with my lender for our team, but that's not my role. That I'm not doing that. So I constantly have to, not just me, our team has to constantly basically just bring it in, right? Like you have to bring it in and manage it so it matches the loan pipeline. When the loan pipeline is low, and which it could be at any bank, you have ebbs and flows, the deposits have to stall a little bit. So you always have to kind of manage that, which is actually harder in a specialty division, I would think. You know, I've never been in any other, so I'm just assuming. Because we're a specialty division, like I think we just have a larger, I don't love this word on my team, but like a larger pipeline, because we're constantly bringing in more, because we've positioned ourselves as the industry experts.
Right.
So it's a little bit different than like a typical sales approach, or like how it was for me years and years ago, where like I just had to hit the phones all day long and get new business. Like then you know when to slow down, right? It's not a bad problem to have, but business is constantly coming in, which we love. So we have to like be able to manage those expectations and those pipelines to be able to better manage the projections. Business banks especially are so heavily regulated when it comes to managing that. And not that I manage it, but I manage the deposit side of it, right? The property management role. So that's number one. That's just banking in general. Now, property management, I think the issues that I deal with, I don't want to say it's consistently the same issue. You know, I think over the years, there's been different trends, like software. It shouldn't really be an issue for us, but it does, because we are the bank and money flows from the software to the bank.
Right.
So I'll give you an example. Like this is something that comes up all the time. I can easily take care of it, but like, you know, people are upset that they paid, I'm just using this company as an example. They paid their owners through AppFolio 6 days ago and it still hasn't reached the owner, right? Or a tenant paid rent and it comes back that tenant, you know, now charged again, or charged fraud, claimed fraud, right? So claimed, what is that term? Clawed back all the funds. So it's interesting because like, while these are not issues that any other banker would have to deal with, it is for us because we're more part of that industry. That's really a software issue, right? It's a software issue, but people come back on us saying like, well, you must be able to fix this. You must have more insight into this.
Allison has the magic.
You can go into the bank and give me my money back.
Yeah, exactly. I'm like, I can't because it's your software. But it's, again, not a bad problem to have. Like none of these are really bad problems to have, because if you look at the you know, the plus of that, it's that I think we positioned ourselves as like the consultants as well in the industry when it comes to that. So it is more of a consultative approach, which is what I want my clients to feel. But sometimes, you know, I don't like saying no, and I have to say no because we have nothing to do with it. So there's those like vendor alignment, or not even vendor, like product alignment issues that we deal with. And, you know, the typical, I think, just bank processing issues that we deal with, fraud. We deal with a lot of fraud, and that is just so typical in the banking industry. It's not because of us by any means, but that's difficult to deal with when clients think like it's like the old days where you just are going to go ahead and, give them the money back. There is a regulatory process that we have to deal with. So regulations, and trying to educate those regulations back to clients is difficult. Not that I don't think that's something other people don't deal with in their industries. I'm sure you guys deal with things like that in your industry. But it's difficult. It's because it's no longer a customer service issue. It's a regulatory issue.
Right.
So your hands can be tied.
Right.
I could see that. I mean, we've had fraud issues and stuff.
It's just been on the rise. So
but it has nothing to do with the bank. It just, you guys end up having to I think people look to you to try to resolve it, and it's not necessarily anything you have power over, and it's not anything that the bank caused. It's still a user error in most cases where we.
And one question that came up just because the compliance side of things, right? Which as property managers, we want to make sure that we're following the real estate commission, and you guys work in almost all states. Like, how do you guys stay in front of that, your compliance team, to make sure, and that all your clients are staying in compliant?
So, no, I'm so glad you brought that up. So when I say compliance, I, number one, always try to relay the message to everybody, which is that I'm talking about more federal compliance.
Right. Okay.
And that is really, actually, back to your last question, that is an issue for us, right? Because state compliance, yes, I have to know the states, and that's difficult because everyone contradicts each other. They contradict each other, and then it completely contradicts what the federal rules of protection are, right? So California, for instance, like I said, I started in California, and Jennifer Newton at that time was like, you don't know what you're doing because you're not meeting California rules. We weren't. And but I did quickly realize that the state rules actually don't matter even half as much as the federal rules, because at the end of the day, if you go through a state audit, for instance, with your Department of Real Estate, and the bank account, let's just talk about only the bank account portion. Let's say they passed you because the bank accounts looked like they were set up as trust accounts. The only benefit there is that you passed a state audit. That is it. Because more than often, those accounts are not actually set up with the true protection that you need. So when something happens from, again, these are my terms, the federal perspective, risks there are risks that happen a lot more than a failed audit. Like, for instance, lack of FDIC insurance. More often than anything else, governing entity liens, lawsuits, judgments, anything where those funds are considered your assets and something happens or your company is impacted, those client funds are not considered trust funds. So they're considered your assets. If something like that happens, the Department of Real Estate, even if you pass an audit yesterday, is not going to come in and help you out on that because they have no say. And they are, I know a lot of, not in every state, but I know some of these auditors in different states. And for years, they'll all say the same thing in conversations, which is, no, when we look at those accounts in that regard, we see what meets our standards, because at the end of the day, they're not bankers. They just know that, okay, you met our standards for the audit. Again, just in this regard, can't help you anywhere else. Right. But then they can come back and not truly be set up correctly. So really that's really what I mean when I say compliance. But with the states, of course, that's difficult, because then what really matters to us on the state side is who's allowed to sign on trust accounts, for instance, right? Because we don't want to give authorization to accounts where they shouldn't have it.
Right.
And interestingly enough, we get a lot of kickback from clients about that. Interestingly enough, they want to be protected, but they also want to be able to go on vacation and have their bookkeeper sign checks who's not able to sign checks, right? And this is just certain states. Certain states you can't have that,
right?
But there's ways around it depending on which state you're with, but like those things, like we're just trying, that's where we pull in the state compliance. We want to make sure that you're doing that right.
Yeah.
Or like if you can't earn interest on accounts, for instance, we want to make sure that's set up correctly. That's not as big of an issue because we, as you guys know, we pay that earnings credit back instead of interest to clients, which is usually a better return and a better benefit anyway. But we always get those clients move onboarding that just wanted how it was before, and it just might not be in compliance. So we try to really come at it from a consultative approach and help them understand the risks. And education is like probably like the second, if not definitely not first, but second or third like priority on my list. That's on my role that's been consistently there since the beginning. Like it's always just educating the client back to compliance rules, accounting rules, like things like that. So,
right.
FDIC rules.
I think you're up to like 4 times consistency.
I love it though. Consistent. You're consistent.
Maybe 5 times.
It's Thursday. Yeah.
Can you speak a little bit to what makes you guys really unique with that credit?
I was going to say, let's get into that because we love those credits.
Yeah.
And however compliant, to stay banking compliant, what can you share on that? Like what makes you guys different and unique? Yeah.
Yeah. So this is just for anyone who doesn't know what it is. So this is called analysis banking. And I've said from the get-go, analysis banking always works for or against you, depending on which bank you're with. More often than not, over the last 15 or so years, it has worked against people, companies. This is not just for property management companies, just any company that's on analysis banking. So the way that it works is it allows your average balances between all of your accounts, your entire relationship, to work with a rate very similar to if it were interest. It's not. It's non-taxable income that you earn that first offsets any transaction fees. So you get that free banking, you just get more transparency into how you got that free banking is what I say. And then what's left over after that, that's your net credit. And that net credit, while again, it's very similar to interest, but it's not interest in the sense that we're not going to pay it to you. Then it's considered interest and taxable income. We're going to use it to offset your third-party invoices. So not all third-party invoices, meaning like we're not going to pay your office rent, for instance, but eligible third-party invoices, which are essentially banking or accounting related services for your company, as well as some partnerships that we have that are more industry-based for you. Now, something we've been doing from the very, 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 very beginning, like since day one, even before it became a formal property management division, is something that we've been doing. Now, like I said, most banks can do it. You get, when you compare us to a lot of other banks over the years, and then I'm going to wait to get to this year because it's an interesting year. But when you look at them, there's usually a few different scenarios. So you might get a scenario like us where that earnings credit rate is high, pricing is very low, or you may get a bad scenario like rate is low, pricing is okay or high, right? Because the rate is low, it's more rate based, and then you're basically paying to be in this type of account. So that's net negative essentially. Or you may have another scenario like, actually I'll say I'll only name this bank because they went under. But so First Republic Bank, right? For years, they used to always have actually a pretty strong analysis program.
Okay.
For businesses, depending on which region you were in. But what happened was when you had a net positive, they would just say, oh no, you just get free banking. Like you couldn't really do anything with that net positive. So then who cares? So then just go on a free small business checking account. Who cares? Right. So it's not really a benefit.
Right.
Now, another scenario I actually recently saw, it was actually a pretty strong analysis program. But what happened was then the net positive at the end was that you could only get 50% of the net positive. So there was like a little asterisk at the bottom of the pro forma that said, I can't remember the exact verbiage, but it was like, this amount or 50% of what your net credit is. So you were getting, instead of, when you should have been getting $2,500, you were getting $1,200. So there's all different scenarios. So you really have to look at it. And it's an interesting, I always say it's very smoke and mirrors. I mean, this is something I sell on a daily basis every single day, including weekends half the time. But, I'll be the first to say it is the most smoke and mirrors product out there, because bankers will use it by just shouting out rates.
Yeah.
But it's not interest, right? So you have to first offset the transactions. That's why pricing is really important. You can get that high rate, but if your pricing is so high, then you're not really benefiting as much as you could.
Correct.
So there's all different types of scenarios. Again, education is key, even in that scenario, right? So why we've always done it. So a couple of things. People always say that this must be too good to be true, or you're giving the bank away, for instance. I'm going to try not to say the C word, Shawn. But historically speaking, it's something that we've done from the very beginning. So it's not too good to be true, because it's out. We've been doing it this whole time.
Right.
You hear customers talk about the fact that we've been doing it. So we're not just coming in and doing it when we need deposits, right? So that's kind of back to what I was saying earlier. In this weird rate environment that we're in right now, bankers are taking advantage of the rate environment, and they're going out and saying, hey, we can do this too. We're doing it. But where were they a couple years ago?
Right.
Where are they going to be? Probably like 12 months from now, when rates start going back under, and also, and that's not even including, like I said, like their pipeline, managing their pipeline. What if they just don't even need the deposits anymore? What are they going to do? So that solves that hesitation. But then also, like, we're not giving the bank away. This is actually something that we only do in our specialty division. So you don't get it as any company at the bank. And also, we manage our bank a little bit differently. Like, we are, while we have a very strong traditional commercial lending program, because we're a specialty based bank, we have certain specialties that we are, again, just think about it like the deposit specialty. On the loan side, though, when you have a specialty there, you tend to just be a lot more successful and have a lot more incoming deals, right, at all times. So we are very, very, very heavily involved in SBA lending. We are, for like lack of a better word, we are monsters in that industry. And we have been, even as Seacoast, back when before we were acquired by Enterprise. And so in order to be a, monster in that industry, you have to be able to manage that deposit pipeline. You have to be bringing in the deposits, right? So that you can continue to loan out, and so that you can properly manage the pipeline and your projections of what you're going to be able to loan out. SBA especially is mostly about speed. So like, it's not necessarily like we can do it, someone else can't. It's like, how quickly can you do it?
Yeah. And
that's really what makes you, that's what drives your numbers in SBA.
That's cool.
So, because at the end of the day, it's all the same rules, right?
Yeah.
For any bank. So this is the way that I'll say in very layman's terms. We make so much money being the monster on the SBA side of things that we're able to give back a good benefit to our property management customers, so that those deposits stay and they don't, come and roll out. And we make enough money off of the spread, to be really candid, to be able to continue to do it.
And that's why, like Ralph said, you'd be crazy not to use Allison with Enterprise Bank.
It's just like, it's our business plan. And that's, I think, what it really comes down to. It sounds so basic to say that, but like banks, especially, like I said, right now, banks are saying, oh, we can do it too. But it's like, this isn't your business plan. This is something that you can do, that you could have been able to do forever. 100%. This is actually part of our business plan.
Yeah.
But it speaks to, like, we have a lot of entrepreneurs, a lot of business owners that listen to the show. It's just, really, you guys got a niche, and
stay in your lane,
and you're very consistent. There it is again. But I
say that, there it is again. Yeah. But I say that all the time. That is literally what I say, Joni. I say all the time, just stay in your lane. Stay in your lane. Yeah. Don't try and do it. Don't try to be the jack of all trades.
Right. 100%.
Learn something and learn it well. Yeah.
And then you execute it really well, which you guys do, because you're not trying to do everything for everybody. you're just doing this for these clients. And so you can be very
Thank
good at
you.
it. Yeah.
Yeah.
So it's awesome.
Well, Allison, I love success stories. I know Shawn loves them as well. So why don't you give us maybe some success stories, maybe something memorable when helping other property managers? There's one that maybe sticks out. I don't know.
Yeah, actually, so there are a few that stick out. I think I like this one the most, and I had a little hesitant to talk about because I feel like I've talked about it before, but it sounds so braggy. But honestly, I'm so proud of not it's not just about me. It's like about the whole team and what we did, which is PPP. So the payroll protection program. Now this is more just about the bank, not just property management. But when PPP came out, we were in this really weird, like every bank, in this really weird situation where we essentially didn't even know what it was, right? Like the rules were very, very vague. They basically wrote it overnight, which made it very risky for clients, for banks to start doing it. So what we did at that time, it was like a very quick decision. Not myself, but our executive team decided to partner with a fintech company. And we rolled it out essentially overnight. But rolling out was basically saying like, here, click this link and get your PPP loan. This was in the very beginning. There was so much panic, as I'm sure you guys witnessed and experienced yourselves, which was so difficult to see everyone panicking. But everyone was like jumping at this fintech program that we partnered with, and everything kept getting frozen out. I mean, you guys saw it on the news, like it was everywhere. Banks were getting not shut down, but like their internet was getting, people's servers were crashing. Same thing was happening for this company that we partnered with. I'm sure I know other banks were using this company as well. So it was like a complete disaster. And I can't remember I always want to say that this was like around Easter, and I could be totally off with my timeline, but I remember like that Sunday night, it just was a whole weekend of just sheer panic, like hearing from everybody. And, I'm a lot of people's banker, but also like I have personal relationships with a lot of these people too. Right. Yeah. So I was hearing it all weekend long. Everyone wanted to know what can we do? And really, we had no impact. We couldn't encourage or influence this company one way or another. So we essentially, and I'm sure it wasn't the only one, but I only know what I was doing, but I was begging my CEO to get us, set up, because we were giant SBA lenders. So for me at that time, I was thinking, well, why aren't we just taking them in-house? Like, we're giant SBA lenders. We were, I think, don't quote me on this, I think we were like number 4 in the nation at the time. But it was just not a typical SBA loan product. So begged. And also I pulled some customers in as well to beg, like the CEO, some big customers, really leveraged that. And then he said, okay, Monday morning we'll go. They went in head first, like our SBA, every single SBA, even our commercial lenders, we took everyone off of everything and just everyone started processing in-house straight through the SBA. Wow. We were one of the only banks that we know of through the news that got every single one of our clients that needed one an SBA loan by the end of it. Wow. And that was in the first phase when, there was a deadline. I'm sure you guys remember this. Everyone was like, money's going to run out, and there was a deadline, and we got every single one of them out. And it was such a team effort that I'm still to this day, like there's nothing else that I'm prouder of, because it really just showed the dedication. Yeah. Like, we are going to do this. And again, once we were in, it's like, go big or go home. Right. And I think we're like that with pretty much everything that we've done so far, that I've witnessed, at least. Like, we commit to something, we're in it, and we're not going to stop. You can't do it right all the time, but you're going to try. And what's that quote? Like, you miss 100% of the shots you don't take. Right. Like, so we're just going to keep trying, and we've had pretty good success so far of getting it right. But that was really special for me. And it's more so from like I said, like more so from like a personal perspective. Like, I just wanted everyone to be okay. And at that time, it was such an unknown. Everyone was so scared, and I totally get it. But I was really proud of our team, our executive teams, our SBA bankers. People were working. I'm not even kidding. Like, I don't even think I slept that entire month. But and I'm not even the SBA banker. I was just like facilitating. But our SBA team was just unbelievable.
That's all.
I love that. That's we have something in common. You're going all in. I love the mindset you took on that.
Something we probably none of us want to relive again either.
No,
But,
no. Hopefully we never have to. Yeah.
So tell us what's in the future for your division, Enterprise Bank and Trust. What's coming down the pipeline for you guys?
So what is coming down the pipeline is more integrations. That's something that we're but really focused on. We have been focused on, but we're really trying to move forward, carry that torch forward. Integrations are interesting because I think the term integration means something different to everybody, depending on who you talk to. Mm-hmm. So it really took a while to figure out, like, okay, you want an integration, not you, but like a customer wants an integration. What do you want out of that integration? That was what made us realize, like, okay, it kind of all means something different to everyone. Mm-hmm. And some of that stuff's already there and available. It's just not a direct integration. Mm-hmm. But to the customer's eyes, okay, it still meets the need, right? So it's been a learning process for sure. That's for sure coming down the pipeline, especially because we're going through a core conversion. So like kind of how, you guys use Appfolio for your software, that's essentially your core, right?
Right.
We are going through a core conversion, which will not affect online banking. So don't worry. There's no online banking conversion. Don't worry. No, it's like our back end of everything, which will help open up more avenues to integrations, as well as other products that we want to take on and have been wanting to take on. But like as a bank, you're kind of married to your core provider, and that core provider links up to all of your other products and providers. Like, so like that is really dependent on what kind of vendors you choose. So that core change, which is going on essentially now, but it won't be live until October. That will open up a lot of different resources for us. Now, what I hope to see, and I'm hoping I'm manifesting it, is just more states. So it's really, it doesn't really affect the bank by any means, but as a whole, so like if you talk to our CEO, for instance, he'd say, we can bank in every single state. Maybe he wouldn't say Hawaii, because I think Hawaii has some weird banking rules. But when you talk to me and my team, I'm very limited to where the property managers can bank. So depending on your state, you may not be able to bank with us, because if we don't, only some states have this, but they're pretty significant states have rules that if you have a trust account, it must be with a bank within the state that has a brick and mortar branch. So like, I can't just go and open an office in that state, for instance, right? It has to be a brick and mortar federally regulated branch, which is a whole other slew of regulations that you have to deal with. And that prohibits me from banking property management companies in that state. My HOA banker can go and bank someone in that state because they're not regulated by the same rules. So how do we get into those states? It would be either it would be a branch, or unless they change their rules, which has happened with 2 states in the past. But we've actually only opened up without an acquisition. We've actually only opened up in 2 of the 2 states that required a rule like that for that specific purpose, and that was Nevada and Florida. I'm hoping that it comes in ways of acquisitions instead, because that is just a quicker turnaround. You acquire a bank that has a branch in that state. We keep that branch. It's like go time. It's like day one is go time. Yeah. A little bit different when, we opened up Florida. It took us about a year and a half from beginning to end. So states would be huge for us. Certain states. For the property management division.
That's awesome.
If this is a question we asked all our guests, but if you were just starting out and going back into your early 20s, what advice would you give yourself? You're pretty young, but
well, that was about 20 years ago, so thank you. God, there's so much advice, but I'm sure you just want business advice. Yeah. No, I'm just joking.
Consistency.
Yeah. I think, honestly, let go at some point, let go, right? Like in the beginning, I think it's really important that you make it your own, you show your value, you prove your wealth, right? But at some point, and I learned this the hard way, you have to start letting go. You can't it's like imposter syndrome at its finest, right? Like you just don't let go of anything because you're too afraid that someone else can come in and do it better.
Right.
But like I said, I had to learn that the hard way. And so interesting. Like if you look back, obviously you guys can't see, but like if I looked back and saw once I started letting go of a lot more, it opened up so much room for growth for me, monetarily, personally, with my family, which helps you in your career. It opened up so much for me. Honestly, I probably didn't like fully let go until probably 3 years ago and in work. And I have had the 3 absolute hands down year after year best years in my career since. So, and I think it's attributed to that, like trusting people and trusting yourself too, right? Like have more faith in yourself that you can let go of things and your value isn't going to go down. Right. And we kind of already talked about it already, but like sticking to what you know, like choose something, do it well. Don't try to be the jack of all trades. Position yourself as like that industry expert.
Yes.
And just go all in.
Yeah.
I love it. Yeah. That's awesome.
Wise words right there, Allison. I appreciate you
Thanks.
for, number one, for what you do for our property management companies, but what you also do for the other property management companies out there. So thank you for that.
Yeah.
Thank you guys. And right back at you. Thank you.
Yeah. So how can listeners get a hold of you if they're in the property management world? And now, correct me. So if they're not, say they're just a regular business, they wouldn't speak to you. They'd probably, you would refer them, or how does, I guess, answer that question. And how can people get a hold of you? Where can they reach out to you and find more about you? Yeah,
absolutely. So my email is usually best. That's I'm sure you can maybe share that, but it's adisarro@enterprisebank.com. If you actually just go to our website, which is enterprisebank.com, full disclosure, there are a couple enterprise banks out there, so make sure you go to enterprisebank.com. Our stock ticker is EFSC, which that's how I always separate us. If you go to our website and go to, I think it's under specialty banking, but you'll find the property management area. There's actually an inquiry form on there, and those actually go directly to me. So I kind of delegate all of those first. So you'll hear from me first and then if I have a separate rep reach out after, I'll make that introduction. Okay. And then, and then of course, talk to your fellow property managers. I'm sure many of those that you know work with us and can make an introduction. Now, from the business perspective, honestly, again, our website, reaching out, you'll find all the different industries that we're involved in. If it's just basic, commercial, or what I mean by basic is non industry specific banking that you're looking for. Our website is a great place to start, but you can always reach out to me and I can make an introduction as well, whether it be for loans or deposits.
And we'll have that all in the show notes as well. So it'd be easy to access Allison's information.
Yeah, awesome. Well, we really appreciate this. Thank you for taking the time today. And I think you added a ton of value and it was awesome. So I appreciate it again. And anything we can do for you, please let us know. But otherwise, we'll see everybody next week.
See you, everyone.
Thank you, guys.
You've been listening to Inside the Wolf's Den, an entrepreneurial journey with Shawn and Joni Wolfswinkel. Tons of entrepreneurial podcasts are out there. Talking. But Joni and Shawn are living it every single day. Their portfolio now includes many franchises and medium-sized businesses. We talk about the trials and motivators of successfully running a business. Join us again soon for another podcast. But until then, reach out on the website at InsideTheWolfsDen.com, on Facebook at Inside the Wolf's Den, on Instagram at Inside the Wolf Den. We'll see you again soon. This is Inside the Wolf's Den. We'll see you next time.